our results, half year, first half 2015, on the face of it looks negative, with HEPS down 16% and operating profit down 17%. But the good news this morning is our revenue has grown by 14%, and that despite us starting on a bad footing with a month-long strike in our mid-range premises, and also still having to deal with the allegations of bribery against one of our directors. The company, despite having to face these challenges, came through, in my view, flying, with a 14% revenue growth I mentioned, but also hard work that has been done on the balance sheet. We saw our interest cost reduced by 5 million half year and half year, and if you look in distribution specifically, where the main trading of our business happens, there we managed to get the balance sheet in much better shape. We managed to reduce our stock levels by 60 million, and not only the reduction of stock, but also the product mix in the stock, where we kept on washing and reducing some aging stock out of the system and replacing that with better stock. Our debtors on hand stayed roughly the same, and that's also good news, because over the December period, sometimes your aging will slightly go out, and then you'll collect your monies after year end. Unfortunately, we paid our creditors too well, and you will see that our days payable outstanding reduced to below 50 days, but there's also a reason for that. At half year, we don't procure the same amount of stock, and therefore you will pay your creditors on time, and therefore that will reduce a bit. So it looks like our working capital has gone out by 100 billion, but if you look at our, as I mentioned, our interest cost that has reduced by 5 million, that's really a point in time. Our gearing has actually improved over the period. So I'm quite proud of the fact that the balance sheet is in a much better shape today than it was 6 months ago. Having said that, we also realized that our gearing of R1 billion at the moment is too high for the group. If you break it down, you will find that the gearing is really attributable to three areas. Our trading business, with roughly 27% of that gearing, 270 million. Then about 30% is Centrofund's, our financial services business book that we've been building. That book has grown from about 350 million to 444 million. Fantastic business, showing good results, and the balance, 300 odd million, has gone towards acquisition of data centrics. We want to reduce that gearing by about 250 million over the next reporting period. How will we do that? Firstly, we've got a property portfolio roughly valued at 125 million. We've already got offers on the table. We will sell that, have some lease back options on the buildings, and that capital will come into the business. We've got a print management business that has not performed according to plan. We will keep the services because it's great business once you've got the machines in field, but we will reduce our stock holding in that business. That should release another 50-60 million rands to the business. And lastly, we're busy with the third action, which I will not give you the detail at the moment, but together with those three actions, we should bring about 250 million into the business, and that's going to take a lot of pressure off the gearing of the business. So all in all, I'm positive, feel that the business is on a much better footing than 6 months ago. In fact, in our results presentation, we mentioned that we believe our second half should be better, and resultingly our full 2015 numbers should be better than financial 2014, which I think is a bold statement, but show you the trust and the comfort we have right now in the business operations that we run, and that should deliver the numbers. Thank you.